Ladies and gentlemen, call me crazy, but a second date is typically a good thing. Now, China and the US, they talked pretty much all day yesterday. They took a break for lunch, they took a break for dinner. Like, this was a all-day affair, okay, in Switzerland. Today, they're back at it 7 hours ago, like early in the morning, okay? And it's still ongoing. There's a couple different, I guess, speculational rumors that are coming out. I will share that with you. But call me crazy. I think we could actually get a China trade deal done tonight. Now, I don't know if it'll be announced tonight. I mean, it's Sunday and Trump said to buy stocks on Friday. Maybe, again, this was part of the plan to pump markets on Sunday. We will see if we do get those headlines tonight. But I will give you my take on this, okay? And I know I'm kind of delusionally bullish. It could be a problem. I get it. But I'm actually pretty optimistic for markets here. Now, in this video, we will also discuss the economic data coming out this week because there's going to be a bunch of it, okay? Retail sales, obviously critically important when everyone thinks the economy is slowing down or will slow down. We have CPI. You have some real estate data, Michigan consumer sentiment coming out. I will give you all of the estimates that Wall Street currently has for these data sets, when they are, and how impactful they will be for markets. We also have earnings. So ladies and gentlemen, buckle up and let's get started. But first things first, you have to understand is I am unapologetically opinionated, okay? If you come to this channel, you come for a raw opinion. I don't follow the crowd. I think outside the box, okay? I don't care if I'm right or wrong. I believe in what I say, and I put my money where my mouth is, okay? That's important. So don't agree with me. Question everything I say, okay? Because a lot of the times what I tell you is so contrary to Wall Street's beliefs. Like I said in the last video, if you're thinking of a bell curve here, okay, straight line, in the middle is average expectations or the base case. Most of Wall Street's base case right now is for earnings to get worse this year, for tariff rates to be somewhere in the neighborhood of 30% across the board, for a 65% chance of a recession, not really pricing in any positives from lower taxes or deregulation, for ongoing issues with China trade, for higher inflation, overall the economy to weaken. Well, in kind of my base case, if we get a deal with China, you could actually see a good economy this year. You may not see that weakening of the economy 3 months from now. You may actually see deregulation and lower taxes lead to a booming in the economy. Not to mention, if these trade deals really do open up, let's say the Chinese market, the UK market, Indian market, Japan market, so on and so forth, you could actually be surprised to the upside this year. You could actually see the markets rally 20% from here in the next 6 months. You could see an aggressive rally to the upside, okay? Now, I don't know if I would call that the base case, but somewhere leaning in that direction is where I am at this point. The fact of the matter is, there's 7 million job openings. Companies do not want to be quick to fire people unless they have to, okay? And tariffs, if they stay super high, which they're only high right now on China because everywhere else is basically paused, then, they don't need to fire people unless the tariffs force them to. And unless people start to lose their jobs, they're not going to stop spending. I don't know, where who Wall Street knows, who these fund managers talk to. But if you know average Wall Street people or average Main Street folks, just average people, they spend money. Okay, they would rather spend money and go on that vacation than save, invest, and then do things maybe how we might do it. Okay, people spend all of their money. Okay, that is what it is. As long as they have a job, they will continue to spend, and if they continue to spend, it's very hard to see the base case of markets right now. So I do think that's important to get out there first things first, that the faster we get to a China trade deal, the more likely my base case starts to evolve. The more likely we could actually see a 20% rally over the next 6 months. Okay, and that would roughly put the S&P at about 700. Okay, like nobody is expecting that. And usually the most exogenous outcomes on the spectrum of outcomes is usually what happens, okay? Like the last couple of years. Nobody expected the bull market to be as strong as it was. Fine. Even if you did, great. But nobody expected it was going to be in 7 stocks for 2 years, okay? People expected the broadening to happen. It just didn't happen. Well, now it's starting to happen. If you look at CNN's Fear and Greed Index, this is the strongest market correlation you have seen in a very long time. Okay, you can see this in stock price breadth. It's at extreme greed. Like on good days, everything is going up. On bad days, everything is going down. There's a lot of correlation. It's not the Mag 7 that is propelling this market. And that's why I do think as well, if we get a 20% rally in 6 months on the headline S&P, big if, again, I'm unapologetically opinionated. I share my opinions. That's why you come to this channel. You could see more like a 40% rally in a lot of these beaten down stocks with higher betas, like a Tesla, right? Like a PayPal or Square even. You could see much larger than 20%. So I think it's still very much a stock pickers market. Now we'll come back to the CNN Fear and Greed Index in just a moment, but take a listen to what Trump said last night about China talks. Donald Trump says, a very good meeting today with China in Switzerland. Many things discussed. Much agreed to. Much agreed to, he said. A total reset negotiated in a friendly but constructive manner. We want to see for the good of both China and the U.S. an opening up of China to American business. Great progress made. I mean, and that was after the first day. They're meeting for the second day. There is going to be a really, really good headline coming out tonight. I would almost guarantee it. Okay, some kind, maybe a pause on tariffs, but maybe a full-on trade deal. Okay, this is in-person talks for like 12 hours yesterday, and who knows how long today. Probably is similar, another 12 hours or so. Like they are ironing out details here, is what it sounds like to me. This is not a just cordial like 20-minute meet and greet. Like this is negotiating a deal. Nobody had that in mind. Keep in mind, the expectation for this meeting was not we're going to get a trade deal this weekend. Nobody was expecting that. Okay. And again, it hasn't happened yet, but if it does happen, that's going to come as a big surprise to Wall Street. The fact of the matter is, recession odds will plummet from, let's say, 60, 65% down to maybe 30%, okay? You will see inflation expectations come down a lot for this year, and the Fed will be able to cut rates more than expected this year as they get clarity on China, because that's what really matters. Like when the Fed talks about uncertainty from inflation, blah, 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 they're really talking about China. Like the Fed's not going to tell you that, but that's what they're actually talking about. Those 3 things are universally massively positive for markets. But then we can start to focus on other things like deregulation, lower corporate taxes, continued investments in AI, okay? The progress on innovation, okay? And get back to more of a business as usual kind of landscape. It will also give us more certainty. There's other side effects, if you will, from a China trade deal, all of which are positive. There is not a single negative, okay? And again, markets move based on expectations. and expectations not happening. And what I mean by that is if everyone has a base case of, as I just mentioned previously, like economy's going to slow down this year, earnings are going to come in lower than expected, better chance than not of a recession this year. Well, if we get a very strong economy, that's what's going to move the markets higher. If we have all of these positive things happen, that's what's going to move markets higher from here. Okay. If you meet the base case expectation, like it's already priced in, people already know about it. Okay. What moves markets is what is not known. What is a surprise. Like if we were to have a severe recession, that's not priced in. Okay. Markets would fall a lot as an example. So, coming tomorrow morning, I'm sure this is going to be taken as a big positive, although we need to see the headlines that come out tonight from Trump and whether or not we do get a trade deal or some kind of pause. Now, I do want to tell you, though, the New York Post last night said this. U.S. weighs plan to slash China tariffs to as low as 50%, down from 145% as soon as next week, so as soon as Monday. This is not going to happen, okay? Or let's hope this does not happen. 50% would cause markets to fall. Like, that's not good. That's not a good trade deal, okay? And I don't think China would settle for that. I don't think they're having 12-hour negotiations, like 2 days in a row, with 50% tariffs being the number considered. I think it's more like we're going to get an additional 10%, okay, plus the 10% that's on right now, and maybe the fentanyl tariffs, okay, which would be 40%, or maybe just the fentanyl tariffs, which is 20%, and the current 10% stays on. That's 30%, but China agrees to this, that, and the next, okay, like opening up their markets, okay. That's more likely to me. 50% would be a lot better than 145%, but 50% as a, let's call it more of a final number, is bad. It's still effectively like a trade embargo against China. It would still have, elevated recession concerns. Like none of the positives would come out of this. You'd still have recession concerns. You'd still have inflation concerns. I mean, the Fed wouldn't be able to cut rates in that scenario. 50% is not a good number, okay? 30% is a good number. 20%, really good number. That's what we could hope for, okay? And, maybe it's like the UK. Maybe it's 10%, or maybe I think the lowest logically is 30% because the baseline 10%, 20% for fentanyl. But I think there's going to be optionality for China to crack down on the fentanyl. So maybe they get stuck with the 10% baseline. And then maybe we pause all tariffs, even the fentanyl tariffs, if China decides to really crack down on the fentanyl, right? Give China basically a pause on everything besides the baseline 10% and let China see if they cooperate in going after the individuals that are producing the fentanyl, okay? Because virtually all fentanyl comes from China, okay? Just throwing things out here, but there's a wide range of potential outcomes. If we 50% as kind of the worst case scenario, that would be pretty bad, and I think markets would sell off on that tomorrow. Now, as far as economic data coming this week, tomorrow morning, you have a speech from Fed Kugler, and that's pretty much it. Again, it's all going to be about these trade talks with China. That's what's going to move the markets tomorrow. On Tuesday, you have the NFIB Business Optimism Index, expecting that to fall about 3 points at 6 o'clock in the morning, Eastern Standard Time. 8:30 in the morning on Tuesday, core CPI month over month expected at 0.3%. I think that's a really high expectation. I think it could actually come in way lower than that. Last month was 0.1%. Core year over year is expected at 2.8%, essentially unchanged. Headline inflation month over month expected at 0.3%, and year over year expected at 2.4%. And then on Wednesday, not really much. On Thursday, you're going to get PPI month over month expecting positive 0.2%. Retail sales month over month expecting positive 0.1%. Last month was positive 1.5%. So the stronger retail sales are, the better the markets will respond to it. So if it's really negative, that's bad. If it's, going to come in really good, that's going to be good. Initial jobless claims expected at 230,000. New York Empire State Manufacturing Index expected to be a little bit better than last month, but still really negative. Philadelphia Fed Manufacturing Index last month came in really bad at negative 26.4. You're expecting negative 8.5. So a little bit of an improvement there as well. A lot of secondary data that comes out as well. Business inventories, NAHB Housing Market Index, couple other things as well on Thursday. And then Friday, building permits for April, housing starts for April, and Michigan consumer sentiment. You're expecting 5-year inflation expectations to move up from 4.4% to 4.5%. Again, this is a very political survey, but Wall Street has been paying attention to it. 1-year inflation expectations are expected to rise from 6.5% to 6.6%. Current conditions expected to weaken a little bit. Consumer expectations expected to weaken a little bit. And the headline number overall expected to weaken just a little bit. So quite a bit as far as economic data this week. As far as earnings, tomorrow morning, Monday.com, Fox, and Chegg in pre-market. Monday and after hours, Rigetti, Plug, Archer, Hertz, Blink, and Petrobras. Tuesday pre-market, JD.com, C, CyberArk, Honda, Under Armour. Tuesday and after hours, Carmen, New, Oklo, some others. Wednesday in pre-market, Sony. Wednesday and after hours, Cisco, Iris Energy, CoreWeave, which just IPO'd not too long ago. Luminar and Jack in the Box. Thursday pre-market, Alibaba, Walmart, John Deere. And then Thursday and after hours, you have Applied Materials, Kava, Take-Two, Galactic, and some others. The big earnings this week, though, Walmart. What does Walmart say about inflation? What do they say about the consumer? Are consumers slowing down? That's going to be one of the biggest catalysts this week, and that is going to be Thursday in pre-market. Even back to like the great financial crisis, like in Q1 essentially, in Q2 of 2007. Walmart was one of the first companies to report of an issue with the consumer, that they were really slowing down. They pulled guidance, like they did not sound good. The S&P actually fell 3% that day. Okay. It took a little while, but it did end up a crisis, right? This was 07, 08. Walmart was, warning about this. And it did turn out to be a bigger problem. So essentially, if Walmart has good things to say about the consumer, I don't think we have much to worry about. If Walmart has bad things to say about the consumer, look out. That is a big red flag. Again, let me know your thoughts on all of this down below in the comment section. Do you think this week's going to be a good week or a bad week? Do you think we get a trade deal with China, a pause, or what do you think is going to come out of these negotiations? Let me know your thoughts down below in the comment section. Have a great rest of your day, and I will see you in the next one.